Welcome to the Lucas Study Point, a place for combined studies. If you like this video, then don't forget to comment, like and share this video. So let's begin.
Hello students, today I am going to start with 11th standard accounting. So the students should know that every human activities or events are divided into two parts. One is economic and another is non-economic. Non-economic activities like a teacher is teaching her own daughter or son, a mother is cooking food for the family. These are the non-economic activities, means it is only service based. Here no income is generated, but in economic activities the income is generated, means like wages, salary, fee, commission and other receipts of cash or kind, they generate the remuneration or income. So in accounting we record all the economic activities. When we talk about the accountancy, we are talking about the two things. One is bookkeeping and another is accounting. Both the terms are different. Many of them says bookkeeping and accounting are same, but no. Bookkeeping and accountancy both are the different things. So let's start with the bookkeeping. Bookkeeping is the proper and systematic keeping or maintenance of the books of account. Bookkeeping is only related to the maintenance of accounts, means it will identify the transaction, means the transaction is financial or non-financial. Only financial transactions are recorded. So it identify the financial transactions, record them and maintain them in a book. For example, it will maintain journal, ledger, cash book and other subsidiary books, but it will not disclose or interpret any type of the result of the business. So whereas accounting is a wider term than bookkeeping. In bookkeeping we only records and maintains the books, whereas in accounting we summarize them, we classify them and we interpret them and we can communicate to the concerned persons. So we can say that bookkeeping is only a part of the accounting. So here we can say that accounting can be done in 8 steps. First step, identifying. Identifying means we have to identify the given transaction, whether the business transaction is financial or non-financial. If it is non-financial, then we will not record the transaction. If it is a financial in nature, then we will record this transaction in the business. Second, measuring. Measuring means if the transaction is identified as financial, then we will measure that transaction in terms of money, means how much value does it consist of, means how much it is of. So we will measure them in the terms of money. Third, recording. Recording means when we will identify the transaction that it is of financial of nature and we will measure in terms of money, then we will record that transaction in our books of account, that will be known as journal. Here we record all the business transaction in a chronological order, means as per time. Fourth, class. Fourth, classifying. In classifying we make out the some ledgers, basically like in journal we record all the transaction, from there we pick all the transactions and we make a different ledgers, like we pick up all the purchase transaction from their entries and we will make a purchase account. Sales transaction, we will make a sales account. This will show that how much purchase we have done in a year or in a month or in a particular period as we are counting. Fifth is summarizing. In summarizing, till now we have identified transaction, measured them, recorded them and classified them, but we haven't got any result in the sense we have not knowing the profit, we not knowing the loss, we are not knowing the our assets and liabilities. So in summarizing we summarize all the transactions and we prepare profit and loss account and balance sheet. Sixth step, analyzing. Analyzing means in analyzing we make some reports like sales report, purchase report, percent of gross profit over sales or percent of net profit over sales, what is our debt ratio, and what is our working capital. This is all calculated on the basis of some formulas which we are using in the analyzing process. So in analyzing we make some reports. Then we move to seventh step, that is interpreting. Interpreting means converting a report into a simple language, means you can say it a translation. So interpretation means translation in a simple language. Like if we read or we get to know that a doctor has made a report, and if we study that, we will not be able to understand the terms which are used in the report. But there is a last sentence, in the last will be written as result. In result it will be written as what is the last answer, means in a simple line it will be written about the whole things which is given in the report. In the same sense, what we will make in P&L account and balance sheet, every person will not be able to understand what is a profit and loss account or what is a balance sheet, or non-commerce student will be not able to understand, and the businessman is a non-commerce, then we have to make him understand. So what we make analyzing, and we make an report from that in a simple language that we can make him understand. So, and then the last step of accounting is communicating. The purpose which we are doing all 7 steps, we have interpreted, we have made a result. So the last step is we have to communicate it. To communicate means to communicate to the person who was concerned with that reports. So all these 8 steps were of the accounting. I will give a quick revise. First step, identifying. Second is measuring. Third is recording. Fourth is classifying. Fifth is summarizing. Sixth is analyzing. Seventh is interpreting, and eighth is communicating. So students, this video was related to bookkeeping and accounting, means what is the difference between a bookkeeping and accounting. So be prepared. In next video I will bring you the golden rules of journal entries, means how we can make our journal entries, and it will be in very easier steps. So keep watching.
Subscribe this channel and don't forget to press bell icon for latest videos.